All right, good afternoon, traders, and welcome to the webinar on MBO indicators. It's a follow-up from yesterday. We had a great one yesterday. We're using the same slide here. I don't know if Vadim is going to make it or not, but we're going to go through stops and icebergs, the MBO bundle, all the other indicators. Any questions you guys have, open it up for discussion and see what's working for you, or we'll look for setups in the live market, and we will answer any of your questions as well. As you guys know, the trading competition is going on right now. That's why we're going over it, because as participants, you're getting free access to the MBO bundle right now. That's why we'll want to answer all your questions. In this bundle here, we covered what market by order data is. So if there's any questions on that, we can review it, but we've gone over it in detail. Yeah, if anyone's new in here, we can point them in the direction and then also briefly cover it. The MBO bundle of indicators, we're able to determine where stop transactions and iceberg order transactions are taking place. Stops, we don't know where they are. We know when they transact. Same with icebergs. We don't know where they are. We know when they transact. We don't know how many icebergs are there, but we know the ones that have transacted. And we went through this in detail yesterday with Scott Pulcini and Vadim, the developer here at Bookmap, and really covered the details. You get, like I said, this is a bundle of indicators. You also get the Trader Map Pro. Due to the MBO data, market by order data, we can filter out the heat map as well. And this is a real benefit, because there's algos in there that are totally dominating the liquidity and the heat map there, and it kind of blows it out and makes it very difficult to read. We also have the Market Pulse Algo Suite. We covered some of these. We also have a liquidity tracker, which a lot of people haven't asked questions about that. We can demo that one as well. During this time, if you want to try Bookmap, this is the time. Go for it. We have our Cyber Monday deal that ends on December 12th. So that is tomorrow, end of the day. You use this coupon code here, 60%. 1 month G plus for 60% off of Global Plus, and you'll pay $39.60 instead of $99. If you want to try Bookmap, this is the time. It's a great deal. It's only for the first month. We're having these Pro Trader webinars to go through all of this. I just got off the call with Doug and the way he's using options, and we talked about some of the stops and icebergs in there. We went and talked about it with Scott. Mayhem earlier in the week, Tom B, many people were all going through this MBO bundle and data and understanding it. And we're doing that because we're having a sale here. It actually started yesterday. It runs through the end of the month. All right, so you'll get 50% off the MBO bundle. This again was people have wanted access to this as a trial or as a discount. So here it is. Go for it. Try it. It's 50% off for the first month. Kick the tires. See if you like it. Why not? Try it for a good period here, a chunk of time. Get it for a month. So let's go through some disclosures and we'll jump in. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's jump in and take a look here at the S&P, and we've got like I said, the competition's going on, and I've got the stops and icebergs on chart here. I do not have them in the subchart. We'll put Market Pulse in the subchart. As we mentioned yesterday, we cannot. We're looking at the Trader Map Pro version of Bookmap. That's part of the MBO bundle, and look at our heat map in here. Pretty nice heat map. It's showing you, the supply up here, the demand down here, and that's the auction that's currently going on. Right in here, you can see the current market. Now, if we go over to the regular S&P, let's take a look at that. Look at the heat map here. Okay, this is what I was talking about. That is filters out this algo bot that's been in here for quite a while now, for several months, and look how it's really screwing up the heat map. We can't see all those nice details in there because this algo is, I don't know how many points away it is. I think it's like 3 points away here. It kind of changes. And you can see them providing liquidity on the bid and then following price, and then price comes down, and then they also follow price. Yeah, anyway, that's what we're able to filter out here. We've got stops and icebergs on this chart. We also have stops and icebergs in the sub chart. Okay? And that's what Doug was showing in the last webinar, and the way he's using it with options and understanding the options buying and selling. And some interesting things that he went through talking about that. And a directional move, like in the, if we look at the stops and icebergs here on the NASDAQ, you'll see that originally larger players from this point right here, okay, so from this point on, they were selling up to here. And they gave up on that and they flipped. Look at the price action here. So we get a retest back down here, and now the icebergs are on the other side buying, and we see this nice move to the upside. We also see stops moving along with icebergs, and Doug was also showing cumulative volume delta moving along here. It's the teal line here, light blue line. All three moving together. These can lead to some powerful moves a lot of times. People are getting stopped out, larger players are buying, and we see the cumulative volume delta continue to climb as well. What was curious with the S&P was that we don't really see the iceberg buying come back in. They just sold a ton right around this 60.55 level is what Doug was showing. Yeah, somewhere around in here. And then all the way down to about here, which is, somewhere around this 80 level, I guess, 70, 77, 80, somewhere around there. And then look, kind of flat lines in here. People are still getting stopped out, but now that's starting to kind of flatline as well. So that's what we are looking at or seeing here in the stops and icebergs. And something we covered that might be of interest with Doug was the, hold on a minute here. Let me get to some of these questions in here. Looks like there's a question. Okay. Kind of looks like Bollinger Band. Yeah, it does. It does, BMX. Yeah, and then let me get to the chat room. I think it's way up above here for me as well. On a minute. Yay. There it is, CME competition. Got it. Okay. There you are. Thank you, Dan. Man, you're an angel. Telling you. All right. So, well, anyway, we haven't seen, when we see the price action here in the S&Ps, just really hasn't done anything since. We were starting to kind of cover that or Doug was covering that in his webinar. Okay. So anyway, let's jump in here. Let's look for some opportunities and reading stops and icebergs and trying to gain some understanding, some additional insight using them. Stops are typically retail traders getting stopped out at certain levels. We don't know that. We see sometimes cascading stop runs, which are pretty evident to me that it is smaller players getting stopped out and getting triggered below like a range or something. And larger players very clearly, typically, are using iceberg orders. They have to if they want to hide their size from the order book. All right, so now let's see what's going on in here. Interesting stuff. In fact, I may even like, boy, after Doug's presentation and understanding kind of options levels, you know, although we do see some buying in here, quite a bit actually, quite a bit of buying in here. Look where we are, and sellers are testing where these buyers came in. Okay, so right here, you can see we can look at the subchart, the bars here. You can also just look at the color and size of the dots, and it is this level here. This is back to the point of control, or at least the it could be point of control for the day here, or maybe it's down here, not sure. So I am curious to see if we get more selling pressure. End of the day, after all of this call buying that we saw earlier, so maybe we can come down and revisit this liquidity down here. Okay, so in fact, what I'm gonna do is I'm gonna jump in here with one lot, and I'm gonna set some orders for, and these are not trade recommendations. First off, okay, I just want to say that. What we're doing though is showing how to trade and potentially manage those trades based off of our analysis in here. Now, Doug said another interesting thing. Now he trades a lot of options. He used to trade, he still trades futures, but he also trades a lot of options. You have an advantage with the options, which is really nice. Is your risk is really defined quite well, there's only so much you can lose, and you could have maybe unlimited gains, theoretically. Or if you're like, selling a call or something like that, it would be the opposite. You would have limited gains and unlimited theoretical losses. Now, the beauty of it is it's a range. So that's what we're going to focus on, or we're going to bring into this webinar in here. So we have our analysis, and we have a kind of an idea in here, but we're going to start getting involved into it, into the trade as a range. Now, I'm using one lots for the competition. Okay, that's a lot of leverage, but it's a competition. In fact, I'm going to move my stop just above the swing here, and the high liquidity here, and just above the figure here. It's a range though, and I want to get filled. I want to be a seller within this range in here. Okay, and that's my idea here. Now I can move let's suppose I'm using only 3 lots. Okay, that's my max. Now, if you're doing this with real money, like I said, this is not a trading recommendation, but if you are interested in this idea in here, try it in sim, also back test it in replay mode in Bookmap, then when you forward test it, also you can try it in sim, and then use micros. Okay, because one lot here is 10 micros, of course. So that's good though. You can put in 3 micros and see if this works for you. And then if it does, you're just going to have more likelihood it'll work out on your side. Any questions on that? So we've just taken it and looked at it as more of a range. And here, let me just bring up a profile, for example, of like a strangle, let's say, or a butterfly or whatever. It doesn't really matter. Just a second. Okay. Yeah, let's go with a short strangle here. All right, so here's your short strangle, right in here. Let's look at this image here. You short a put, you short a call, and this is your 0 line right here. Okay, so what I'm trying to show is that if price closes anywhere in between, this would be your price levels in here. okay, on the horizontal. If it closes at the time of expiration or the time that you close it and maybe buy it back, within this range, you made money. Okay, now if it closes up into this small range up in here, you made the maximum profit at expiration. That's what we're trying to kind of go through here as well, just with positioning though with lot sizes in here. Okay, so are we worried about this going against us right now? No. In fact, we're going to add in at other areas. If we have one up here, we're kind of actually riding along. You can see this our limit order here. Right alongside this iceberg order here, 230 have transacted right here. Okay, and he's still in the market. Okay, so actually you can see the 230 right here transacted, and he's still here in the market. And he only got one, the last one that he traded. Let's just zoom in here and I'll show you the whole evolution of it, right? It was detected here, and then you see every little transaction here. Now we're down at microsecond level, so millions of seconds. And if we zoom out now, that wasn't in there for very long. You can see it's just this little area right here. And enough transactions, though, to get 230 contracts off as a seller. Okay, now what are the limitations of doing this in here? Although like you're kind of spreading your risk over several points in here, what if price goes my direction? I've only got one lot on. I don't have full size on. That's part of the risk. Okay, unless you see something that looks really good in here, you can cancel these and then add more in, looking for that move to unfold into this liquidity down here. Okay, so that it's up to you. But anyway, I'm sure a lot of you have played around with these ideas for quite a while. So I will I'll move on here. All right. Find the geez, Dan is way at the bottom and way at the top. POC is at 96. Okay. Yeah, so that is the POC. Thank you, Stephen. I'm going to add another column in here. Make this one a CVP column. All right, so that's kind of an interesting idea as well. So the most traded level here at 96, and price has been pretty comfortable at that area. The profile shows us all these transactions, so we know that yeah, price can come up to here pretty easily, and then here's the high of the day, and we don't see so many transactions up here. Also, we don't see too many transactions down in here, especially down here. So price kind of skipped through that area pretty quickly, and then traded up above, and then it accepted and kind of went back and forth in this little zone in here. Right. So anyway, this is just some ideas, some food for thought, and now it's all about your trade management. Now you have your idea, your thesis, you have your stops, at least one right now. And you also have your take profit down below here. I'm actually going to move that one up and just look for the move down into just below the liquidity here, or in front of the liquidity below the swing here. All right. All right, so Stephen, what are you looking for since we're hovering around POC right now? And after Doug's presentation, we can see that all this call buying, and then it kind of flattened out, and so did the S&P. And we didn't see so many put buys, but so we're just kind of looking for a range bound activity. Basically, we're slightly bullish, but it's range bound. Okay, so that much we know. So we're looking for. Are we looking for a directional move here? Not really. We're looking for this kind of range in here, basically. In fact, if I'm looking for my directional move, that might be a little too lofty of an idea. Maybe I want to cancel this one up here, just above POC. And maybe I want to be a buyer or a seller up here instead. Maybe that's a better strategy here. Okay, so anyway, I was looking for, since this is POC, the thing I'm looking for is sellers to pick up below this area. And I'm not getting it right now. So I am going to cancel this one here, okay, with this iceberg. I'll cancel it and I'll keep this one up here. And that's the way I'm going to limit my risk right now. This idea is really not working out. I do not see the sellers in here, and I need to see the sellers in order for price to go lower into these areas here. And I'm not getting them. Okay, so this idea is really not working out, but we took a shot at it, right? That was the concept, and we spread our risk over this whole range in here. Again, these are not strategies. These are just kind of it's food for thought. And there's other ways to do it as well. Maybe if you're looking for a directional move to unfold, then maybe you go all in, but you're going to have to maybe limit how much, because you're probably going to have to widen your stop out a bit. All right. So some things to consider. Okay, and we're back up above POC right now, and we're starting to find some buyers, and they're still trying to kind of push this higher. As we know from our webinars about institutional traders and institutional size, that this is kind of their cost basis here. So above or below POC, or above or below VWAP. These are the things that are important to some of the larger players. If price is below the VWAP, or let's say it's above the VWAP, and their position is long for the day, then yeah, maybe they're looking for pullbacks to that VWAP to average their price in. Can I explain the red dots with numbers? Sure. Those are stops. This is part of the MBO bundle of indicators. Okay, so let me show you where you can get more information about that. Okay, as I mentioned, we're having a sale on that right now. But go to bookmap.com. Here's the sale if you want to explore the deals here, Cyber Monday and the MBO bundle discount. But then go to more, and then you can either go to the Learning Center or the Knowledge Base. I would go to the Knowledge Base in this case, because these can be rather technical. And then click on add-ons right here. And then you'll scroll down, you see stops and iceberg subchart and on chart here. Okay, and this will define all of these in here in detail, all the different specifications and features. How do I keep an eye on the Mag 7? Great question. You can use the well, there's a few different ways to do this. Actually, you can use Market Pulse. I'll show you how to use Market Pulse for this. Stephen, I need to have those symbols all open. But there's a Market Pulse web version that I want to show you. I believe it's up and running here. I know they kind of stopped it for a little bit. Let me see if I can find it here. Space. Yeah, looks like it's up. Again, you will need to have a Bookmap login subscription for that. Open up a new symbol here. Okay, so here it is. So you can look at them in here, Stephen, and you can see it's really great. Look, here's NVIDIA with volume pressure imbalance, VPI, NVIDIA with a price change, NVIDIA with pace of tape change in here, okay, for buyers and sellers. And Tesla, same thing, same algos in here. So you can add them like this. You can also add in, I believe you can, there's a mag 7 data type in here. Not. We can at least add in the stock index price change, okay, or we can also add the stock index volume pressure imbalance. Okay. Oh no, this is it right here, Stephen. Okay, so here's your mag 7s right here. Okay. This is great. This is a really cool product. It's free as well. I don't know how long it's going to be free. So if you're interested in this, reach out to us at beta@bookmap.com, and they'll sign you up for it, and you'll get access to it. It's showing a heat map in a different form of heat map compared to Bookmap. And you can see that, here are 7 stocks in here, and they're kind of divvied up by the market capitalization. And you can understand what you're looking at in here. Okay, so Google, Meta, Microsoft, pretty green, NVIDIA, pretty red. Apple, mildly so, and Tesla, kind of mildly green as well. That's for the price change. Okay, so if you hover over here, you can see all the details. Now, our volume pressure imbalance here for these is showing a different picture. Only Amazon right now is pretty bullish. The rest are pretty bearish. All right, so there's our correlations right there. So go check that out. And what I really like about this, Stephen, is that it is, well, first off, it's free right now, and then secondly is that you don't need to open up all sorts of symbols in here and then open up all sorts of widgets. Is here in your web browser. Great. So now I just keep this on top. I know what I'm looking at. I'm good to go. Yeah, it's pretty cool, Rob. Okay. All right, well, this is going against us here, but again, we don't care. We're in a range in here. Okay? And we're not playing this. Here, let me get my pen tool. We are not playing a different game here. We're not playing this, right? We're partially playing that. We are playing this. Okay, and that's a big difference, right? So think about it. It's like instead of like being a sniper trying to snipe in for this little target right there, right there, you're not. You're throwing a hand grenade. Let me see if I can draw one, with the pin, and or throwing a bomb. Let's say, yeah, a bomb I can draw, right? And you're throwing your bomb into this zone in here. That's what you're doing. Instead of that sniper rifle. Let me see if I can do it, guys. Sorry for this. It's been a long day. It's been a long week, so I'm just trying to have a little bit of fun here too. Drawing with the mouse. So you're not trying to snipe it and just nail this one here. You're throwing that bomb in and trying to get this zone in here to work for you. Now, what we can do in here is look at our analysis quite a bit differently as well. All right, guys, I know some of this is pretty basic stuff, but have you traded it? Have you tried it? Have you kind of worked out an edge? And then if you have, do you get caught up in this in here and it goes against you and it makes you all nervous? This is a consideration. Even the way we managed it in here in our consideration was like, it's not what we're looking for. I'm going to cancel that one and I'm going to put it at the end of the range here. And was it a good decision? Well, so far so good. We'll see. I didn't get filled up here. I only got one position on, and that is the risk that you take. Anyway, point made. Thanks, BMX. I appreciate that. So uh, putting in a long or short or a maybe for me. That's pretty good. Pretty good. All right. So anyway, guys, yeah, we've got all these we have all these events this week, and we also have the Bookmap Academy meeting tomorrow. I think I'm going to lose my voice by the end of the week here. um, but anyway, now we're playing like hand grenades and horseshoes, and not it's not target practice here, or trying to hit the bullseye. And that's like what you can also do with the options, depending on the strategy that you're playing. All right, so anyway, our analysis in here was that we had our big move to the upside. We have high liquidity filled in here, one more push. All this back and forth in here. High liquidity also here on the offer at lower areas. Buyers come in and trade into it. But again, high liquidity up in here too, just below the figure here at 6,100. And that's the move we're playing right now. So back down to the bottom of the range and maybe break the range is what I'm playing here. Now, the big risk that you have if you play this way, of course, is let's suppose you position yourself in here throughout this range in here, right? And if you do, and then price goes against you and stops you out up in here, you're going to take a big loss. Okay, so how can you kind of avoid that? Well, a few different ways. This is one position here. Maybe you stagger it. Maybe, depending on your risk profile, maybe up here you put in two, not just another one. And you're looking for it to, if your analysis is correct, you see the it's actually adding risk in here. But what I'm saying though is you'll just take your stop, take your loss, and look for the next trade. You're looking for the bottom of the range and then maybe a potential continuation of the range, right? So below the range. So you could also stagger them. So as price goes against you up into here, this would be your full position. So let me just kind of demo this. I would zoom in. Okay, here we go. And then maybe I select two up here instead of, so I have one here, I have two up here. That would be my full position, maybe three lots altogether. All right, so now, or another way to kind of manage this in real time is, all right, I'm looking for sellers. I'm not seeing many sellers here. So what do I want to do? Do I want to put two on here? No. I'm going to go for one. And you might even want to, not only front run liquidity in here, you might want to put the order into that liquidity. Because we're seeing buyers in here. The context in this range is we have more aggressive buyers than we do sellers right now. Okay, and that's fact. And our position's down here. And we saw the selling picking up here, and we thought, well, maybe we're below POC here. We'll look for the sellers to pick it up and trade it back down to here. Okay, we're not really seeing that right now. All right, now, again, though, the same idea. We might get lucky here. What if, for example, this is the same idea, very much the same idea. All of these buyers in here and all of these buyers in here. Oh, I'm sorry, not these buyers over here. I'm sorry. It's been a long day, like I said. All of these buyers in here. All of these guys in here. And then all of these extra guys in here. What if they got it wrong? We should see a beautiful stop run to the downside. Okay, so again, we're looking for right here, kind of right where we got in. We're looking for a lot of sellers there to push it away from POC here. Okay, from the inside out basically is the trade. And I'm still not seeing it. It's not developing. In fact, look at the sellers down there. There's none. Okay, it's not looking too good. And we see even a little bit more buying coming in up in here. Okay, and aggressive buying in here. So it's up to you. Do you want to continue with this idea, or do you want to and maybe something flips or changes in the order flow in this range, or do you just want to exit it and look for the next setup? They take a small loss. I mean, who cares? Like, this would be a few, like a 1.5 loss here, and then look for something good and then put some size on it. Okay? A lot of different considerations. All right, let's get back into the stops and icebergs. Iceberg up in here, we saw that 200. It turned into 249, and we did get some stop runs down below in our areas in here. Another iceberg. Oh, I'm sorry, that's the same one. Let's see here. This guy, funny iceberg here, moving it all over the place, and is up here at 6,100 and a half. Yeah, I'm gonna flatten it. I'm gonna take the small loss on this. It's just the chart's telling us something else. Okay, I just see more buyers, more buyers. It doesn't mean that all of a sudden a tremendous amount of selling will come in and come back down into this area. And if we do see that, then we'll reconsider the entry here. But yeah, I mean, the chart's so far, chart is telling us we are wrong. What if we go long in here? Well, yeah, we can go long and probably just trade it right up to this high liquidity in here where our stop would have been. Again, I think I'm going to wait for a better position in here. And I'd like to see the squeeze really unfold here. And if we can get, I would love to see sellers below this area here around this 96 area. That'd be fantastic. Let me see if there's any questions in here. Nope. Only 4 people voted. All right, I'm not allowed to have fun. Let's see here. Yes, I am. Okay, overwhelming majority. All right, thank you guys. Excellent. Fun stuff. All right, let's see what else is unfolding here. Well, it's kind of doldrummy. Not a whole lot in here. We can jump over to the NASDAQ if you guys want. Maybe we see a little more action over there. What do you think? Buyers pushing up in the NASDAQ. Okay. All right, let's jump over. I got a loss from yesterday carried over. Wow. Okay, so NASDAQ actually, let's jump back to the S&P. Um, hmm. because boy, that did not carry through on the S&P at all. And what if but the NASDAQ, I mean, we just traded up to high liquidity in here. In fact, if it was quick enough on that, that's a short. Okay, trade it right back down to here, take cover, and look for the next. Okay, and this is kind of what we've been covering in the webinars. This is a whole different kind of approach. Instead of the zone, we would be a sniper up here, and this is our zone. High liquidity up in here, and then look at the high liquidity down here on the bid here and here, right? So those are our targets, and in fact, there we go. Let's see. Now we can even be a buyer in here. This is our zone. Okay, so now let's take a shot at it. Actually, let's see if this pans out. Okay, so we just traded into high liquidity down here, okay? And now we're looking for a move back up into our zone in here. Okay, and here we go. All right, so let's take a shot at it here, and we look for a move back up to here. Okay, where it dropped from up here. Okay, because we see the volume in here. Right, so we're trading our zone in here. We traded into high liquidity, and then now we're looking for the buyers to come back in and trade it back up. Okay, and then meet some of the sellers up here at this 218 level. Okay, that is the concept. Okay, sellers dropping it down, buyers bringing it right back up. So someone's playing along with that concept clearly. Okay, I mean that you know, for them this was a buy clearly. That could be kind of a top. We'll see if this is Alan. This would be it's not necessarily a toxic move, but it might turn into one. Toxic move is the move away from that POC typically, or away from a zone that's trading. It's really sloshing around in here. Buyers are down here at 11. Sellers are still up here on 18. Some coming in at 17 now. Okay. Let's see here. So that's our trade idea, and let's see. Maybe sellers are going to try to move it away from this whole area in here. They're trying. I mean, it's very thinly traded up here compared to this area down here. So it could turn into a mean reversion, and then we're wrong. Let's see if maybe this is the kind of a just test this liquidity down here and then trade back up into the zone here. See if we get that. Nice stop run to the upside, 52, 10, 14. Well, yeah, look all the way up, 51, 60, 52, 10, 14. And then it's really kind of fallen off now. 10 to the downside here, and that's it. How's our S&P doing? We'll kind of sign off on this one for now, and then let's jump over to our S&P and see how that's doing. Oof. Actually, it still may unfold. Our idea still may unfold. It's got to get below this area here, though. It's 96. Okay, and we turn our heads, and the buyers do come back in here. Okay, top of the range here. We got to see them break the range, actually. If we, well, our liquidity's up here. I'm going to kind of move it, and someone's kind of front running our front running, or going along with our front running. Okay, so there we go. Okay, so we're filled up here, and that's that, right? So not much, but again, the idea. In fact, our idea kind of was severely tested here. That typically we see the range. At least I see the range not tested so low like this in here, down to here. Typically we see the range where it broke out from, and then that is what was kind of a resistance here turns into support going across. We came back down to lower areas a few times here before going back up into this range. Yeah, NQ is always pushing. We were trading the Nasdaq a little bit too. I'm sorry, the Russell a little bit yesterday. I don't really trade it very often, but let's see if we can find any opportunities in here. Any questions on stops and icebergs or market pulse? Yesterday I went through and showed you guys with the market pulse for the NQ. Let's go to that. Yeah, let's bring this up because the NQ has works pretty well with the market pulse tools, and the Russell can as well. They all can, but we get these extreme readings a lot quicker in the NQ. Right, so I'm going to bring up the volume pressure imbalance here for all three actually, and let's see what it looks like here in the subchart, and we'll bring it over here. Let me make this smaller. It is the smallest it can be. Okay. All right. All right, so we got our widgets up there. I try to move them a little bit out of the way still. All right. And it's building here in the subchart as well. And it's still adding here. Okay, and we'll go up to our add-on here for our setups. Is it here? I know I have it in here. Looking at it yesterday. Setups checklist. Here it is. Okay. All right. And we added in this setup that we gave you on, pretty straightforward setup in here. Higher time frame level, high liquidity, and icebergs at that higher time frame level, and we'll grade them each one in here. And we're looking for an 8 or better on our grade, and then a large followed by a large stop run. Okay, so actually this one's looking pretty good actually for a fade up here. This is up to highs of the day. We got our large stop run here, and then we're looking for market pulse extreme. We got it here. We didn't actually get it here. Okay, so you may have gotten stopped out on that one, depending on where, if you put your stop just above this liquidity in here. But if you put it up just a little bit higher than that, you would have still been in it. Anyway, you're kind of looking for an entry. Oh, I'm sorry. You would not have gotten in here during that market pulse extreme. You would have gotten in up here because it's a higher time frame liquidity. Okay. And then also market pulse extreme, CVD, and then consider entry. The opposite volume starts to come in. That would be here actually. If you did follow that and then you wrote it back down to this liquidity here or in here, you would have had a nice little trade and it wouldn't have gone against you a tick, most likely, maybe a tick or two, maybe. And then take your profit at your high liquidity on the way down. Done. Okay, let's see if we get another one here. We can trade this setup in here. Okay, we can also parlay that into this idea for the zone for trading. Maybe this is the way to go. All we're trying to do and is look for edge, build edge here, like have some sort of higher probability edge. Okay, and we have to be patient to wait for that edge. And by getting in with small risk throughout a range, we have just increased our probabilities. Okay, let's see here. Do we get some of our moves in here? No market pulse extreme. We have high liquidity. Now, is it a higher time frame level? No, it is not. Right? Even this is it's a little bit higher time frame, but this is a higher time frame level up here. No question there. Okay? Our higher time frame level is it's not really that high a time frame. It's more down here, just above the 800. Okay, but since we don't want to wait around for that, we'll play some of the smaller ranges in here. All right, so here we got market pulse extreme. We have CVD extreme. We're at the bottom of a range in here. We have not traded this liquidity though. Okay, so that's where we're gonna place our order. Okay, we got to look for that high liquidity to transact. We want the sellers to meet the buyers. And I'm front running them by a tick just so I'm not at the end of the line here. Let's take a look at this in a bigger picture. Let's suppose we get this totally wrong here. That's our entry. Okay, well, we can enter more down here. Okay, and then our cost average would be here at 807, somewhere around in here. Okay, so we just got filled. Okay, so what are we looking for in this range? We're looking for a move back up to, and the safe bet would be the high liquidity or where it dropped from in here. I'll put my take profit up there. Okay, now I did not get a extreme market pulse reading here, but we went lower. No, I did actually, right in here actually, not here though. Right, so just extreme volume on the sell side, more extreme volume on the sell side, also CVD, higher time frame range. It's not that high of a time frame range, but is a little bit higher than some of these other little ones in here. And then let's go through our checklist again. What else was it here? Stop run. Did we get a stop run? Yep, we got 11. Okay, not the most, but we want to see a large one here. This is higher probability if we get that large stop run. We got our CVD extreme. We got all that. We consider our entry after the volume came in. We didn't do that. Okay, and I actually entered on the way down. Okay, so it took me in with a limit buy. Okay, the safer bet would be to get in here. It's you lose this little edge here, but you got in front of that high liquidity here, and then you're trying to get out back up into that area of high liquidity here. Make sense? Any questions? There's another way we could potentially manage this one as well. Okay, this would be our entry, and then maybe this we'd wait for that more of that volume for another third of an entry. This would be a third, this would be a third. Then maybe if we can get back up above this POC as well, you start to see it really pick up in here. Maybe you get in your other third and then dump it off also. Manage it on the way up. Heck, I don't know, maybe you take this one off up here. You see some liquidity in here. And this is where it really, well, the sellers came in and moved it away here. I don't know if Alan is in here or not. I don't think so. Yeah. For Alan, though, I was gonna. He was asking about what this toxic order flow looks like, and what is toxic order flow, so want to answer your questions on any of these stops and icebergs. That's really what we're here for. Yeah, please get your questions in. Okay, so what is it? Well, it's this kind of move in here, okay, by a larger player. But you can see that this larger player was able to achieve with that is move price away from just a much smaller zone here, and very successful at it. In fact, we got a retest back to it. Okay, now we might get caught up in this toxic order flow and look for another toxic move all the way down, maybe down to just 06 here to begin with, but maybe they're targeting the 800 down here. Okay, so this is why we talk about this in terms of entries and or who's in control, right? Now this move here is within a range. It's within this whole range in here, so we're kind of still like, well, we can buy it down here and dump it off up here. Maybe I was a little too lofty looking for back to the top of the range here, which would be the highs of the day here. Okay, now interesting developments down here. The order flow is ebbing and flowing in here. They pulled here at this 801, and they're adding here at 804. So maybe we should kind of look to move our target up here as well. Okay, let's look at this chasing here. Even this order is getting pieced out, and they're adding up here at 806. Okay, so this larger player in here is kind of eager to get filled. Okay, and he's getting filled. Okay, sellers are taking them on. Okay, we are filled as well. Okay, our cost average has come down now. In fact, I don't like this trade too much now. I would add another one down here and look for this to be a new range in here to potentially trade. Okay, so this would be the, seeing my mouse control. Okay, so this would be a potential range, and this could be a potential range. All right, it's starting to work out for us, but I would actually, I would look for the sellers to drop it down to the bottom of this range or this swing here. Maybe they do, all right. So where are we going to place our targets now? All right. Well, maybe we have to readdress that as well. We do have kind of a high volume node here, right? So maybe it would be and this is kind of where the sellers came in and dropped it. So maybe we consider taking some off up there. Okay, so this was our original entry. Here's our second entry. This would be a small take profit, and we have our original take profit up at the highs of the day here. Yeah, I'm not too happy about this move right now, to be honest. Let's see if we can just get some off up here, and then we'll see. Yeah, because if we can get buyers back up above here, we can get a nice little squeeze to the upside. So we're still in it for that. Okay, let's see if we get our squeeze here. Again, this is kind of an odd one, to be honest. Again, it's getting close to the close though, so that might be kind of part of the issue here. It's an odd one because it's an odd range in here. Okay, our partial is taken here. Looks like we're going to get our short squeeze. So now, actually, with our stop, I'm sorry, with our checklist setup here, we're looking for actually taking profit. And move it down just a little bit here. Okay, so we're kind of looking for the opposite in here. Hold on. Okay, there. Yeah, so looking pretty good actually for the squeeze. The squeeze is setting up. So actually, we're not looking for the stop run here. We're looking for getting out at the stop run. Okay, in fact, we had 21 stops here. That was the part of the stop run we're looking for. I think we can get a bigger one here because we've got a lot of people going short here. Okay, so this is kind of demoing what we were looking for earlier in the S&P on the downside move. Now we're looking for the upside move, getting above all of this selling in here. So all of this selling in here is where we're looking for the buyers to squeeze them. I'm really looking for the buyers here. Let's see if we can get the pop and then up into some of these areas. Now, let's also take a look at our take profit in here. I don't like it. They pulled here. They're up higher. I'm going to move as well up higher. Yeah, they're actually also a little bit lower here as well at 15. But I'm gonna go along with this guy in here at 20. Okay, because I'm looking again for that big stop run and pop up into the highs here. So that's where I'll exit. All right, now I'm gonna also put in my. Let me show you what I'm gonna do. All right, we're gonna use an OCO. I'm gonna cancel all my orders. We're gonna put an OCO in for one. And I'm going to right click up here at 18 3/4 and then down here below this little swing here, then I'll hold down the shift key and then I will also right click, and there's my stop limit. It was a stop limit. Okay, I'm going to cancel that then. Okay, so if I cancel that, it cancels both. I want it to be a stop market. Okay, down here. Don't get caught up in stop limits. It might go through your stop. You might not get filled. Okay, let's do it again. Right click, hold down shift and right click. Okay, we're going to get stopped out of this one. Sure, that's fine. That's our plan. We're looking for the squeeze and it's not materializing. Okay, we got a little bit of that squeeze here. That was it. Up to this level here, or this liquidity here. All right, and so we're stopped out in the remainder. All right, guys. Anyway, made a little out of that, and we're open for the move to the highs. Okay, let's look for another one now, using the same setup in here. Thanks, Vinny. It is. There's not much. This is what we have to work with. Again, it's a webinar, and this is the time that we're trading. We're trying to get the most cover these concepts with what the market is giving us. All right, so let's see. Actually, we retested back up into the point of control here, and couldn't get above it here, or at least this high volume node here. Now we're finding the sellers in here. It's a high volume node they just traded into. So maybe this is the range. Maybe we have to kind of redefine our range in here. And this actually looks pretty good. It looks a little more plausible now that this is our range. Okay. So let's just redraw it. That way we're below our range right now. We need to see buyers back up above it. Okay. You guys remember Slowdown's Wyckoff Spring? Same idea. In here basically is we were looking for a rejection below here, and then buyers to come back in, back up above these guys, and then watch it fly. There's one more concept I want to go through in here on this and trade idea. It's that diagonal in here. You guys probably remember it was Donkey Face that he did these studies on overlapping candles. And I want to cover this because it was the higher time frame yesterday. Look at all these wicks up in here on the hourly. Let's just zoom in here a bit. Okay, on the hourly yesterday, well, we had we had this big move down, and then we had this chop in here during the webinar yesterday. And what I want to cover is this. See these? Look at these wicks in here on the way down. In hindsight, this looks like, oh yeah, I should have shorted. Clearly, I should have shorted. I should have saw it coming. Well, we did mention some of that in here. I think we caught it here, I think, on the move down on Monday. And then I can't recall if we're looking for maybe the gap fill and move back in. And then I can't recall what we were covering in here. We didn't, maybe this is all we saw was during that webinar, it was kind of like this. And we're thinking, well, all right, oh, it might have been like that. It might have been one more bar. Hold on. See, what bar is this? This is the 12 o'clock. So this is too late. This is the webinar had ended. So we got this bar though here. Okay, but this is starting to tell you something here actually after the webinar ended. We have this move down in here. But this is what I'm saying. We've got wicks on the bottom, wicks on the top. Even on this move down, this is kind of that candle I was talking about that is potentially toxic to get price to move away from that area. And then on days like this, though, it can be really, really frustrating. I find it at least frustrating because you get these wicks, and you know, you go, okay, well, they're clearly there's sellers coming in here. They're below this area. I'm short. And what does it do? It immediately comes back up and retests these areas by the buy side and maybe stops you out. And then it comes right back down again and just kind of dips a little bit lower, and then you get another wick to the upside. This can be really kind of trying and frustrating because you're looking for that pure move and you're not getting it. So that's when to look for pullbacks, and draw up your price channel, and look for where price might go. Where do the sellers come in? Where is that supply on the offer? Where did the sellers take control? Okay, so let's do it with this example here. Right, so and then we can consider also trading in that zone area that I was talking about earlier, and make it more like hand grenades, or instead of a sniper. Okay, so we know that this is where sellers came in and they were retested. We saw that in real time, and then we bought down here, and then went against us. We bought down here again, and then we covered here half, and then we got stopped out for a small loss. So the what is I going to cover here? The so the wicks. We know this is going to be a wick, and here, let's actually put the candles on here. Okay, and then how do you manage that? So look for, in the order flow, areas in price structure, liquidity, and you can write these down and put them into your setups checklist. Okay, and you can look for these things, and it depends on how you want to manage it as well. Perhaps you get in some where you think you should get in, but then also get in some back where that move began from, or where that high liquidity comes in, or maybe you wait for that to roll over, and then you go with the selling up in here. Okay, so these ways in here of management will allow you for better probability of winning and less frustration. Okay, you're not going to win as much, most likely, but you're not going to lose as much, and you're also just going to be level-headed in here and make better trading decisions. It's just for considerations, and and that's what we're here for, is to go through many different ways of trading. And trade in front of you as well, these many different ways, so you can kind of understand, oh, okay, that's maybe how I'll do it. All right, let's see what's going on now. We had some volatility here 10 minutes before the market closed, right at 350. Stephen, you are one very patient trader. So that's a real skill you have naturally. Mentioned it in the Bookmap Academy many times. So if you want to buy, you have to click below. Oh, okay, for a buy stop or a sell, a buy limit, you would left click below. Yeah, we can cover that, and we'll very, very quickly go through this. Okay, so if you want to be a buyer along with some of this liquidity at these price levels, this is where you place. Whoops. This is where you just left click down here. Okay, there's my limit order. Now you can click on that and turn it into different sizes if you want, etc. You can cancel orders here, just maybe these or all, whatever. There you go. Okay, so luckily enough, I canceled just in front of that. All right, so let's see if we get a setup in here. Okay, sellers driving the market lower, but do we hit a higher price time level? Nope. All right, so you want to be sell side. All right, let's go through this, what we just covered in here. If we're driving lower for sell side, then we want to be a seller up in here, and we will right click up here. Okay, this is where price kind of just dropped from. Okay, maybe we miss it. Okay, that's part of the game here. Okay, let me get rid of that price channel, and then we will draw a new one in here. Okay, because we're kind of looking at these wicks, right? And let me play around with the candlestick settings here. We'll go with a smaller time frame on the candle. 1 minute, 2 minute, 2 minute, 1 minute. Okay. All right. So yeah. So there. Now we just got tagged, right? So price came up, hit us, and we are short at just below or just above the 21,800 level. Okay. We don't know. I mean, look at these buyers coming in. We might come back up to the highs of the day. Okay, but we wanted to be short. We're looking for these wicks. This is our zone in here. Look at the volatility before the close here. So, all right, I'm just going to put my take profit then down at the bottom of this range in here and this liquidity here, and we're filled. Okay, so we're out. Now that's more of a volatility range play in here. Yeah, it is algo time. Absolutely. I mean, and just larger players. Look at the volatility. So anyway, we played the range and worked out. Okay, and we waited for the pullback. What Steven's talking about, if you guys want to learn about the trading, let me show you where. Go to bookmap.com and then click on the more button here. Go to the Learning Center and then this Getting Started course in here. Click on that and click on Trading here, and then this will go through how to place your orders, especially this one here. This video here is called Placing Orders, but how to use the trade control panel, OCOs, brackets, trailing stops, all that good stuff is here. Right? It's also on here when you sign up for this competition. It is on the competition page as well. All right, so it's the same video. In fact, we'll just scroll down a little bit, and then it's this video here, how to set orders for the competition. Okay, just click on that. Go to YouTube as well if you want, and here's the placing order video. All right. So left click is always a buy, blah blah. All right. Okay, almost there at the close now. Our S&P's got to have dropped. That's what we were looking for. Yeah, it did. Okay, it finally did. We were looking for getting below all of these buyers in here, and that was our sell in here. This was our cover. We were out for a 1.5 loss. So it was kind of the top of the range in here, and we thought it might come up a little bit higher. We just saw a lot of buying in here. The chart was telling us no. Yeah, was it a good decision? Well, in hindsight, it was up to about here. And then we see the sellers just now coming in. And they are moving away into the high liquidity down here. Okay. What do you guys think? Vote for, are we going to come back down and fill in all of this low volume node in here? Retest this area, okay, or are we going to kind of chop back up into this zone in here? What do you think? Is this the inside out move that we're kind of looking for earlier? Looks like it. We could use that same idea. Now at the close, it's kind of dangerous to do this, but let's just do it for the fun of it here. I'm going to place a limit up here, okay, because I'm looking for a zone again. This is a very small little zone. I'm also going to place a limit up here. I am not going to sell at market here, though. I'm looking for a pullback. Okay. A lot of times we see, now we're just going to kind of amplify, let's just amplify this as being, let's suppose it's a higher time frame move. This is where it dropped from up here, right? A lot of times what we see is the move back down and then the chop stays down here. You don't get a move back up to here. Okay, so that's another area to consider, placing your your order on a pullback. Right, so we missed this one. Okay, we did not want to go market sell down here, especially in the close, and we missed it. Okay, we did not get a pullback, not even to this little area here, not even to the shallow pullback here. The other pullback would be right in around here, and we certainly did not even come close to that. Now there's another question in here. Do we still want to be a seller? I don't want to be a seller up in here. This is the move I was looking for, and now we might get buyers hand over fist coming in. So I am going to cancel all my orders here. Okay, we're just about at 4 o'clock, and this thing will probably come up to 95, 97, and then right back down to 93 or 90. That's it. Okay, not much of a close. Only like a three-point move. All right. Well, for any of you who are not using that stops and iceberg or market pulse, and you want to try it, this is the time, like I keep saying. So go to bookmap.com and then click on explore these deals, and then you'll need to scroll down a little bit. Here's the Cyber Monday deal to try Bookmap for 60% off for the first month. It's Bookmap Global Plus. It's a good price, and it ends on Thursday. If you scroll down a little bit more, here's the add-ons deal. This one's going to last a little longer here until the end of the month. Okay, so you have some time to try it out, but why not try it out now during the competition and during these webinars, so you can learn and play around at the same time. Okay, and try it out for yourself. Anyway, some nice deals there. I hope you guys take advantage of it. We will resume tomorrow. Let's see who's up tomorrow. Scott Pulcini's up. Well, it's going to be the end of the competition at market close tomorrow. So you guys might want to. I highly recommend you go to Scott Pulcini's webinar at 10 a.m. We also have Robert Rother before that. See here, if we go to bookmap.com, go to education, and then you can scroll down here to the calendar. Right, we're going to have a new calendar here pretty soon as well. It'll look a little more professional than this. So tomorrow, highly recommend both of these, all three webinars. And then we have our Bookmap Academy webinar after the competition just ends. Okay, so we can do some recap in the Bookmap Academy. But Robert Rother will be in English at 9 a.m. East Coast time. Scott Pulcini right after he ends, after 10 to 11, Scott Pulcini, and then right after that, 11:30 to 1, Tom B. Okay, so we've got a nice lineup here of traders, and they'll be talking about these, how to read and use some of these MBO indicators in here. Okay. Yeah, thanks, guys. Thanks, everyone, for coming. We will see you tomorrow. Have a good evening. Okay. Yeah, take care. Bye-bye.